Naked Economics. Undressing the Dismal Science by Charles Wheelan is an accessible and engaging introduction to the core concepts of economics. Wheelan demystifies the subject by stripping away complex jargon and technical theories, making economics understandable for the average reader. The book covers fundamental principles of how economies function, the role of government, and the impact of economic policies on everyday life. Here's a summary of the key concepts from the book. 1. The power of incentives. At the heart of economics is the idea that incentives drive human behavior. People respond to incentives in predictable ways, whether they are monetary rewards, punishments, or social recognition. Wheelan emphasizes that understanding these incentives helps explain why individuals, businesses, and governments make the decisions they do. For example, companies produce goods and services because they are incentivized by profits. Consumers buy products that provide the best value for their money, and governments create policies that incentivize certain behaviors, like tax breaks for homeowners. 2. Supply and demand, the market in action. Wheelan breaks down the concept of supply and demand, which explains how prices are determined in a market economy. Prices rise when demand exceeds supply and fall when supply exceeds demand. This dynamic creates a balance that determines the allocation of goods and services. For instance, if there is a drought that reduces the supply of crops, the price of food increases. Conversely, if a new technology makes production cheaper, prices may fall. Wheelan explains that the free market, when left to operate without distortion, efficiently allocates resources based on these supply and demand signals. 3. The importance of prices. Prices serve as signals that convey valuable information in a market economy. They tell producers what consumers want and how much of it to supply. At the same time, prices help consumers decide how to allocate their money. When prices rise, consumers cut back on demand, and producers are motivated to increase supply. Wheelan uses the example of gasoline. When prices rise, consumers tend to drive less or switch to more fuel-efficient cars, while oil companies look for new sources of oil. In this way, prices help balance supply and demand, ensuring resources are used efficiently. 4. Market failures and externalities. While markets are often efficient, they do not always work perfectly. Wheelan introduces the concept of market failures, which occur when markets fail to allocate resources efficiently on their own. A common cause of market failure is externalities, where the full cost or benefit of an action is not borne by the person making the decision. For example, pollution is a negative externality because factories may produce harmful emissions without paying for the environmental damage. On the other hand, education is a positive externality because an educated population benefits society as a whole. In these cases, government intervention may be needed to correct the imbalance. 5. The role of government in the economy. Government plays a crucial role in correcting market failures, ensuring fairness, and providing public goods. Wheelan explains that public goods, such as national defense, roads, and clean air, are things that the market cannot provide efficiently on its own because they are non-excludable and non-rivalrous. This means that one person's consumption doesn't reduce the availability for others, and no one can be excluded from using them. Government also regulates markets to prevent monopolies, which can stifle competition and lead to higher prices for consumers. However, Wheelan warns that too much government intervention can distort markets and create inefficiencies, so a balance is needed. 6. Productivity and human capital. A key determinant of economic growth is productivity, which refers to the output produced per unit of input. Economies grow when workers become more productive through better education, training, and technological innovation. Human capital, the skills and knowledge possessed by workers, is essential for improving productivity. Wheelan highlights how investing in education is crucial for long-term economic success. A well-educated workforce can adapt to changing economic conditions, create innovations, and drive growth. Countries that invest in education and training are more likely to experience sustained economic prosperity. 7. Globalization and trade. Wheelan explores the benefits and challenges of globalization and international trade. By trading with other nations, countries can specialize in producing goods and services where they have a comparative advantage, which leads to increased efficiency and economic growth. Globalization allows consumers to access a wider range of goods at lower prices, and it opens up new markets for businesses. However, globalization also brings challenges, such as job displacement in industries that move overseas. Wheelan argues that while globalization creates winners and losers, the overall benefits to society are significant. The key is ensuring that workers affected by trade have access to training and support to transition into new industries. 8. Money and inflation. Money serves as a medium of exchange, a unit of account, and a store of value. Wheelan explains how money makes transactions easier by eliminating the need for barter, but its value must be stable to be effective. This brings up the issue of inflation, which occurs when the supply of money grows faster than the supply of goods and services, causing prices to rise. Moderate inflation is normal in a growing economy, but hyperinflation, when prices rise rapidly, can destroy an economy by eroding purchasing power and creating uncertainty. Governments and central banks play a critical role in controlling inflation by managing the money supply through monetary policy. 9. Unemployment. Wheelan discusses unemployment as a critical indicator of economic health. There are different types of unemployment. Frictional unemployment. Short-term unemployment that occurs when people are between jobs or entering the workforce. Structural unemployment. Long-term unemployment caused by changes in the economy, such as technological advances or globalization, which make certain jobs obsolete. Cyclical unemployment. Unemployment caused by economic downturns or recessions. While some level of frictional unemployment is natural, high levels of structural or cyclical unemployment can be harmful to an economy. Wheelan emphasizes the importance of policies that support job creation and retraining for workers in declining industries. 10. The stock market. Wheelan explains the basics of the stock market, describing it as a mechanism for companies to raise capital by selling shares of ownership. Investors buy stocks with the hope that the company will perform well and its share price will increase, allowing them to sell the stock at a profit. The stock market plays a vital role in the economy by allocating resources to businesses with the potential for growth and innovation. However, it is also subject to speculation, and short-term market fluctuations do not always reflect the underlying value of companies. Wheelan advises that long-term, diversified investments are usually the best strategy for individual investors. 11. Behavioral economics. One of the more recent developments in the field is behavioral economics, which looks at how psychological factors influence economic decision-making. Unlike the traditional assumption that people always act rationally in their own best interests, behavioral economics shows that humans are often irrational, prone to biases, and influenced by emotions. Wheelan discusses examples like loss aversion, the tendency to prefer avoiding losses over acquiring gains, and overconfidence, which can lead to poor investment decisions. Understanding these tendencies can help individuals make better financial choices and avoid common pitfalls. Conclusion: Naked Economics simplifies economic theory and provides real-world examples to illustrate how economies work. Charles Wheelan covers essential topics like incentives, markets, government intervention, globalization, and human behavior, making it clear that economics is not just about numbers and charts, but about understanding how people interact in a world of limited resources. The book emphasizes that good economics should focus on improving the quality of life for everyone by making informed decisions based on rational analysis. By stripping down the subject to its most important elements, Whelan helps readers see how economics impacts their daily lives and the broader society.